As we enter 2024, we are witnessing a profound paradigm shift. Price pressures continue to ease, economic growth is slowing, and central banks are gearing up for a cycle of monetary policy tightening in the coming months. We are clearly at a turning point, and many unknowns are emerging. Equity markets are nervous since the start of the year after a thundering 2023. On both sides of the Atlantic, we expect the slowdown to continue in the first half of the year before rebounding in the second half following the first rate cuts. Although economic growth is expected to be broadly similar in 2024, growth in real household income, a recovery in manufacturing activity, and US leadership in terms of disruption mean that the US equity market should remain more attractive than in Europe. In terms of sector positioning, the end of the economic cycle and forthcoming monetary easing encourage us to maintain a good level of diversification. We continue to favor a barbell strategy that combines an allocation to sectors at the end of the cycle and to sectors that could benefit from the recovery in the second half of the year. We are also maintaining a defensive stance on emerging markets and more specifically on China. The country's economic rebalancing is all the more difficult as the deep real estate crisis is weighing on household confidence. Patience is therefore called for. In the bond market, the easing of monetary policy that is likely to materialize in the coming months means that we can look forward to an extremely interesting period for the asset class. Over the past few months, we have gradually increased our duration on the US, German, and French sovereign curves. There's still a lot of potential for lower yield at the long end of these curves, which should better reflect a gradual return to inflation above 2% and growth of around 1%. The credit segment also remains attractive, but rising default rates, particularly in the US, are prompting us to remain cautious, favoring exposure to high-quality companies. The US presidential election in November, armed conflict, and other unpredictable factors will certainly bring volatility to the markets. 2024 should once again be a year in which diversification between equities and bonds will maximize performance while reducing risk. On behalf of Banque Héritage, I wish you an Happy New Year.